when we have our administrators meeting or trustees meeting, she's the one who will come in to bring the account and analyze the account. Well, in her own capacity, she's a chartered accountant for many years. She had been executive of, a couple of banks, and currently she had been financial directors in England, Nigeria. She pioneered, a couple of organizations, including banks. And God has given this gift to us in the church. And when it comes to the area of accounting, she's the one responsible. Let's welcome together Pastor Fumi Shofeka. One thing I didn't say is that she's an MBA from Cranfield.
Praise the Lord. All glory belongs to God. We are nothing of ourselves, and we can do nothing except that which He enables us to do. I want to thank you, sir, for the privilege to speak here today. And I want to thank you all because you're going to listen attentively today. I'm not really going to use that screen because I sat at the back there and I didn't see any of what was on the slides. And I suspect that those of you on that side can't see and those of you on this side cannot. But what we will do is at the end of the session or at the end of today, we will provide information to the ministers. Is it to the ministers, sir? Yeah. We'll sort out exactly who gets what. So in my session, I'm afraid you're going to need to write. Apostle has asked me to speak about budgeting, but I'm also touching on accounting. And Jesus himself said it when you think about budgeting. He says, suppose one of you wants to build a tower. This is Luke 14. 28 to 30. Suppose one of you wants to build a tower. Will he not first sit down and estimate the cost to see if he has enough money to complete it? For if he lays the foundation and is not able to finish it, everyone who sees it will ridicule him. We will not bring ridicule to the name of the Lord. That is why we must count the cost ahead. Saying, this fellow began to build and was not able to finish. What God has placed in our hands, we will finish it by His grace. So this morning, before I start on the subject itself, I want to pick up on something Apostle has been teaching us, but also Pastor Sidney has touched on through his session. And for ministers, whether you are the lead minister in a branch, the resident pastor, or the pastors around the resident pastor or the lead minister, your own integrity is important. Your integrity is important because when people look at your organization, they want to look at who is running this organization and can I trust this person? And so from a financial perspective, even if you are not there today, I want you to be mindful of the fact that people will check you out. And that goes to individual management of our own affairs. So we cannot be people who are in a place where on the streets people don't trust us because we've borrowed money from someone and we didn't pay back. Or if the Charity Commission, which is our own regulatory body here, were to look at who were those running the organization, they would have questions. And the Apostle just read about Daniel and the fact that they couldn't find anything in him. And that which he has said all of us must know is something that we need to bear in mind. So if you need to, readjust your position, at least from this point where we know it, because we are all in the public glare. Whether we're in the UK, whether we're in Europe, whether we're in Africa, there's a lot more transparency, and we need to ensure that we do not bring shame to the name of the Lord. So today I'm very quickly going to go through two things. One, I've put up a set of accounts, and then I'm going to talk about your management accounts and use that as the basis to talk about your budgets. Three key things you need to know about your organization from a financial perspective are that you need to have financial statements. Your financial statements include, in the private sector, it's usually called your profit and loss account. But if you have a charitable business or organization, it's probably referred to as an income and expenditure account. From a statutory perspective, in the UK, it is your statement of financial activities. But what's an income and expenditure account? We'll talk about that very briefly. The second thing you need to be aware of is your balance sheets. Your balance sheet actually talks about your overall financial position. Maybe the best way to look at it is your standing. So what assets do you have and what liabilities do you have? Same with us as individuals. If I have £10,000 in my bank account, but I'm owing £20,000, my net position is a net liability position because I'm owing in overall terms. So your balance sheet is critical, and we'll talk about what's in that. And the final thing you need to be conscious of is your cash flow. You have a cash flow statement that actually shows how your cash is moving within your organization. What are the inflows? What's coming in and what's going out? And for all of us, even as individuals, what you want to ensure is that you're not spending beyond your means. So you have to have cash to undertake the business that you need to deliver whatever your objectives are. So very quickly, I'm going to give you a couple of illustrations of things that you need to be considering when you're looking at your budget. When you do your budget, you need to have a budget for your balance sheets, you need to have a budget for your income and expenditure accounts, and you need to have a cash flow budget. Some of these things are important because all of us who are responsible for branches are aspiring to acquire our own buildings. You need a building. You don't want to continue paying rent to a third party who's continuing to prosper on at the expense of the work of God. So if you're looking to acquire your own property, you probably are going to go and speak to a bank. And if you go and speak to a bank, the bank is going to be looking at, what's your track record? How have you been doing? Can you afford to pay us even if we were going to loan you some money? So what would they be looking for? Probably 3 years financial statements. Not just here in the UK, I'm sure everywhere across the globe, they will be looking for at least 3 years financial statements. What that means is that from day one, well, in CFT we have that, but from day one, wherever you are, you need to be conscious of ensuring that you have proper financial statements. I remember when I joined CFT many, many moons ago, Apostle said at the outset, Apostle said at the outset that God is taking us somewhere great. And from day one, he had determined that we were going to have audited accounts. I know that there are many organizations that don't have audited accounts. So if you are running a ministry, I would advise that you do have an auditor. This is an external auditor who audits your accounts. We'll talk about qualification a little bit later on if I can get to that. Because when the bank is asking you for 3 years financial statements, they're not interested in what you prepared on your spreadsheet. They're interested in what an independent auditor has confirmed the position of your organization is. So if you're not doing that currently, that's something to take away. When they're also looking at your track record, they're not interested or not likely to loan you money if every year for the last 3 years, your income and your expenditure are exactly the same. So you're just managing to break even, or that you are making losses. Because what that says is that if I now give you this loan, how are you going to be able to repay? Because you don't have extra capacity. So one of the things that Apostle had been particular about, and I know he said it through the course of this week, is that when you're looking at your expenditure, and we look at the trends over the years, by the way. So what did we spend last year? How did we do last year? How did you do the year before? Where did we spend so much and we need to cut back? When you're looking at your accounts, you need to make judgments about what you want your bottom line to be at the end of the year. And then you can start driving what you want your income to be and what you want your expenditure to be. Apostle is the expert on teaching us about giving. He has taught us all ministers about how you should teach your church to give. So if you want to drive income, and when something is, when we have a project, an apostle wants to make sure we're achieving our objectives, he'll ask Pastor Sidney, how are we doing with people? Pastor Sidney is the one who knows whether or not people are paying their tithes or otherwise. And then apostle knows there's a problem there. He needs to go and teach the church about teaching, about giving. The reason why I'm picking this up is that in my own eyes, the church is God's business. And business needs to be run as you would run a business outside. It's just that they're different principles. But the fact of the matter is that we are all in this world. Your bank is not about whether or not your business is a Christian business. It is a charitable organization, but it must run efficiently. And for us all, if we don't run efficient, if you're incurring losses every year, quite frankly, you close down very quickly, isn't it? So we need to be conscious of these little bits. Let's go in and look at some of the things that we'll find in these statements. So if I was going to look at your I&E, is what we've called it here, income and expenditure, what kinds of things would you be thinking about when you're talking about income? And this is in the context of preparing your budget. So we've got to budget for our income. We've got voluntary income. A lot of our income and your income will come from donations. People pay their tithes. People give offering. We have Thanksgiving offering. Sometimes we will have a project. And if you have a project and people, for example, you're giving towards your building. People are giving towards your building fund. That income is not income for us to touch. That income is defined as a restricted fund. So it doesn't sit where you can then draw from it on a regular basis. But what are other types of income that we have? We may have investment income. So your organization has got a lot of excess funding because you're saving, perhaps, for your building. You don't want to sit in the bank. You don't want it sitting in your bank accounts. You need to think about how can I invest this so that I can maximize the returns on that. And in terms of investing, we need to be very careful also as God's organization. We need to be careful about where we're investing. We need to make sure that they are ethical areas that we're investing. And we cannot invest in a place or an opportunity that does not align with our own beliefs. And many of you would have seen a little bit about the scandal around, was it high-interest lending organizations? Not Oxfam, this was a couple of years, where the Church of England actually had an investment in some organization. So we need to be mindful of these things when we're looking at investment. But it doesn't remove from the fact that we want to maximize the return that we can have on the monies that we have. And I'm sure everybody here knows about the parable around the talents. Other income you can have, bank interest, of course. So the little bit that sits in your bank account, of course, you're going to earn interest from that. One other thing is that with a number of organizations, you probably will have other assets that are generating other income for you. For example, you could have acquired a house a couple of years back. Maybe that's where you started your ministry. You're renting it out now, so you have rental income. That's a different type of income. On top of your building, you may have billboards that are generating income. That's another source of income. And I think the key thing around this is also being creative. Around what assets do I have that I'm sitting on that I'm not necessarily conscious can generate some income. But once you have put that to generating income, you need to be conscious about how you account for that. All of these sources of income will come into your income and expenditure accounts. How they're accounted for may differ. So if you've got commercial income and you have so much more commercial income than your core purpose, taxes may apply to those types of income. But your auditor will be able to advise you on that well ahead of the end of the audit year. So those are some examples of things that you need to think about in terms of preparing your budget. Sometimes people say it's very difficult to budget how much income we're going to have in the church next year because it's down to people's charitable giving. But what you can do is you can step back and think, how did we perform last year? What was our membership? You know, when Pastor Sidney is asking for your branch reports, as an example, what we're interested in is what's your membership like? How many people are in there? What's the level of income that you're generating? And we can start making some judgments about what the implications may be if you increase your growth, or rather if you grow over the next year, for example, by 20%, does it have an implication on what your income will be? But you could also be growing and your income is falling. You need to understand as a minister, why is that happening and what do you need to do? So there's some parts that are the spiritual aspects, but from a financial perspective, we need to look at a number of factors to make a judgment about how much income we can generate in the next year. Sometimes people will say, and I remember the year where there were a lot of redundancies, across the UK. I can't remember what was driving that. But the fact of the matter was that we experienced a position where our income was increasing. Because what I noticed was happening was that we were having, it wasn't Operation Push per se at that time, but we were having sessions where Apostle was praying and blessing and speaking over members of this house. That when people are losing their jobs, you will be getting opportunities. You'll be getting 2, 3 opportunities that you choose from. So we didn't actually suffer as a result of the redundancies that were taking place in the external world. But that didn't mean we didn't take it into account when we're setting up the budget for the year. The reason I'm saying it doesn't mean we didn't take it into account is that when I talk about your bank, when your bank is looking at your forecasts or your budgets, you may take the view that I'm going to create this budget that looks very rosy so that the bank can give me the facility. If you get the facility, they are going to monitor you every quarter. So if you create an overly rosy budget and you manage to escape and you get the loan, every quarter you must meet up with that budget. Because the minute you start falling behind, there are covenants that they'll put in place very quickly. And the bank always has a right to withdraw things or to seize your assets, or otherwise it will not be what will happen to any of us in Jesus' name. So that's a bit about income. One piece I should put in, if you are in the UK, I'm not quite sure what the position is with Europe, is around covenanted income. So all of us in the UK know that if you are a charity and you have received donations, if those who have made the donations are taxpayers, then the UK government will give back to you the charity. It's just under a third, it's over a quarter of what those donations were. So if, for example, I gave £10,000 to CFT, I am a taxpayer. CFT, at the end of every month, provides a return to the inland revenue. And they come back and give us, is it 2,800 or something of that 10,000 that will come back to CFT. So for all of us who are leading branches, that is money that if you don't claim it, you've just lost it for nothing. And if you're looking at building, or, buying a building or acquiring a building, those are untapped resources that you must make sure you tap into. I don't know what the position is with you in Europe, but I'm sure that you can investigate that, or your accountants will advise you on that front. And wherever you are across the globe, it's critical to understand what are all the opportunities that are available to us as charities. Where can we earn income from that we're not necessarily aware of, and we can increase our ability to fulfill our purpose that way. And we as CFT continually do that, I should say. So very quickly, if I look at a couple of areas around expenditure. When you're budgeting for expenditure, there are two critical things to bear in mind. You will have fixed expenditure and you'll have variable expenditure. Fixed expenditure is stuff you cannot but incur. So we've got this building, we have a mortgage. Whether we like it or not, we have to pay that mortgage. So before we start budgeting for how many vehicles we might need to transport our delegates or otherwise, we must take account of those things that are critical. So some of the types of things you would have would be staff costs, for example. We don't have a high staff complement, but we do have staff, and we have to make sure we pay our staff. We've got our mortgage. There are a number of issues such as bank charges, because if you've got a bank account, you have bank charges and you have to pay. We have a loan, so we have to pay the interest on whatever loan it is we've got. If you've got hire purchase, cars or otherwise, you need to make sure that you are paying all of those. We have professionals who do work for us. So we've got auditors who will audit our accounts every year. We need to make sure that we budget those costs. And in budgeting those costs, typically what I would do is I'd be looking to keep the costs fixed for a number of years. But that's a negotiation that you'll undertake, and that's some way of minimizing your expenditure. The general principle is that you want to minimize your expenditure and maximize your income. That's what all of us as individuals want to do too. Evangelism. Now, there are lots of costs that will come under evangelism because that's our main purpose. The reason I'm calling this evangelism is that when you're looking at the Charity Commission's definition of how they pull together expenditure, all the activities that are associated with evangelism, winning souls into the kingdom, and so on and so forth, need to come within that definition. One key thing that you must always remember is that when an external party is looking at your accounts, they want to see whether the majority of the income you have is being expended on your core purpose. So we hear it all the time on the news when they're talking about all these big charities and the fact that X% of your income is actually, all the donations, X% of that is going on administrative costs. We are particular within CFT that the significant element of what comes into this house must go on evangelism. And our auditors will also look at that. And if you do not have that position, then when the Charity Commission is doing random checks, because they do select organizations at random that they're going to come and do spot checks on or come and do a detailed, in-depth assessment on, then you probably get picked up. So it's useful to also understand the guidance around how a charity should run. I'm sure Pastor Tayo will have something for us on that. He gives us a lot of useful handouts that we have to study. One other thing that most times we won't think about when you're thinking about your budget is depreciation. So Pastor Sidney, I remember, talked about the assets that you have. If you have an asset, there is something called depreciation. What's depreciation? If you buy a car, it has a useful life of, how many years is it these days? You think it's up to 5 years? Do they all last for 5 years? You as an organization can determine what your depreciation policy will be. But there's no point kidding yourself and buying a car and saying it's going to last 20 years. Because if I bought it for £20,000 and I say it will last for 20 years, it means that depreciation, which is a charge to my account, which is an expense, is what I mean, will only be £1,000 every year. But that car is not going to last you for 20 years. So a depreciation policy that assumes 20 years is a little bit flawed. But you need to look at what are the categories of assets that you have and what is a reasonable judgment of what the useful life will be. And by the way, even when you determine what it will be, your auditors will probably also challenge that. Because if I did 20 years for a car, they're going to say, certainly not. The norm is probably around 4 or 5 years, or 3 or 4 years or thereabout. But be mindful that depreciation is a charge, so that is an expense and is going to reduce your surplus at the end of the day. I think the summary around this is that whatever your income sources are, you want to make sure that you can get the most out of those, and whatever your expenditure is, you can actually depress that. Everything that you don't have to spend money on is called a variable cost. So you can make judgments about whether or not you spend on those things. And one of the things that we do as a church is we look for places where we can either get volunteering opportunities so that we don't have to spend money to fulfill a purpose. One other thing we've been looking into recently is around apprentices. The UK in particular is promoting workplace apprenticeships. So there is a lot of training that your staff or your volunteers can get free in the UK if they are based in your workplace. So it's an opportunity. I mean, I've looked at this in terms of some other organizations. You can be putting someone on a £12,000 course and you only pay £1,200. And so you're getting value of well over £10,000. But depending on your level of income, you will not have to pay a penny for that £12,000 value of training. So it's another way to ensure that you can reduce your expenditure, but you can also still get the value that you need out of the people who are working with you. I'd encourage you to have a look at that. Very quickly, in terms of your cash flow, I've made the statement. What you're interested in with your cash flow is that all the cash that is coming or the resources that you have available do not ever fall below what you're spending. So for us as individuals, if I spend more, if I don't have an overdraft in place, for example, then I start incurring unnecessary charges. And as a church, managing and being stewards for God's business, we don't want to incur unnecessary charges. So with your cash flow, you need to prepare over the next 12 months as a minimum what is going to go out in all of these categories I talked about. So how much rent am I going to pay monthly? How much am I going to expend on salaries? How much am I going to pay in terms of interest on loans? But also, how much am I paying in terms of repayment of the loans? So there are some things that will not be in your income and expenditure account that will be in your cash flow statement. Everything that you need to spend money on is what you find in your cash flow statement, whether they're in your income and expenditure account or on your balance sheet, which I hadn't touched. So the bottom line is you want to make sure that you are never in a position where you have a negative balance on your cash flow. Are we together? Am I carrying everyone along, or shall I stop? Okay, then, great. one of the things that the bank will look at also is, in terms of whether or not they can give you a loan, is to look at your forecast cash flow. And what they're also making a judgment on then is, even if your income and expenditure account looks rosy, your balance sheet looks solid, it may be that you don't actually have cash to undertake what you are required to at specific points in time. So let me give you an example. Your balance sheet can look rosy because you've got an investment of 5 million in a building somewhere. So your assets will look like they significantly outstrip your liabilities. But that building is not cash that you can spend. So what the bank is interested in is, I'm giving you this loan, you need to pay me back 20,000 every month, and you need to pay on top of that your interest of 2,000 pounds every month. Your building is not going to give you that. So they want to see how is money coming in, which is where your income account comes into play. One thing about that income account coming into play, though, is that there is a concept in accounting called accruals. Anyone familiar with accruals? So what does that mean? It means that with income, as an example, maybe Pastor Dakwa has promised me that at the end of this year, he's going to give me 1 million naira, because it's naira he can give me, really. He's going to give me 1 million naira. That's very true, sir. Pastor, apologies. He said it could be dollars, but that's where you're coming from. So he's going to give me 1 million naira, and he has made that pledge. He has paid 100,000 out of it. There's 900,000 to come. And I know that I'm going to get it before the end of the year. I can actually accrue that sum. That sum is due to me before the end of the year. When I look at expenditure, I can also accrue my expenditure. So I bought this building. I bought it, well, that's not a good example. What do we spend money on, Pastor? We have the convention. They have ordered food for everybody who is here today. But the person who has supplied the food has said, don't worry, you don't have to pay me today. You can pay me at the end of March or 1st of April. When I do my accounts for March, I cannot assume that because I haven't paid that person, I haven't incurred that debt. I've already incurred that debt today. So when I'm preparing my accounts, that expenditure has been incurred, so it must be accrued. Are we together in terms of accrual? So the fact that your accounts look interesting or look very rosy doesn't mean that you have cash. And the reason why I went through accruals are that all those things you can get away with in your I&A or your balance sheet, you can't get away with them in terms of your cash flow. Because if I'm going to make that payment on the 1st of April, it has to be in my cash flow statement that I am owing so cuisine so much to be paid on the 1st of April. Did anybody get a clue from so cuisine? Okay. One last thing very quickly on this front is around your balance sheet. I've explained it in passing, and I don't want to spend too much time on it, but your balance sheet is simply looking at all of your assets and all of your liabilities and trying to understand what your net position is. So some examples of things that you'll have on your balance sheet would be all of your fixed assets. So your buildings, your vehicles, your computers, and so on and so forth. All those things are called your fixed assets. And all those fixed assets are the ones that you have depreciation on that get charged to your account. Do we remember what depreciation was? Yes, excellent. Then you have your current assets. So what is a current asset? Pastor Dakbo, for example, that 900,000 he hasn't paid me, but he has promised he's now a debtor in my own books because he has already committed that. Maybe a better example around that is that maybe I sold you, what can I sell? I sold you some services. I sold you tapes. Okay. Pastor Sidney ensured that you got all of the tapes and calendars for this year, and you haven't paid us for them. So you have become a debtor in that instance. So we still have a significant sum of money that we're expecting from you, but we've already put out the services. So there is an asset that we have in you as a debtor. So a debtor is a current asset. The cash you also have in your bank is considered a current asset. Let's talk about liabilities. So the other way to look at the debtor position is when Pastor Dapo is looking at his own accounts, he has already collected tapes and he's collected calendars. He's owing us. So in his own books, we are creditors. So he owes us, he owes us money, so he has to recognize that in his books. But to us, he's a debtor. You will not be a debtor, Jerry, Pastor. Excuse me. Excuse my French. Okay, so the bottom line is that we'll be looking at what our net position is. Finally, just thinking about the bank. The bank is interested in ensuring on an ongoing basis that they can monitor your performance. So what they're looking at when they're monitoring, when they give you a loan, they probably give you some covenants. They're called covenants. Sometimes people will say they are loan covenants. Some will say they are funding covenants. The bottom line is they are covenants. Apostle has taught us about covenants, but let's not go there. So what are the kinds of things they'll be looking for? How well your cash can cover all of your obligations and how many times over they're able to cover those obligations. So as an example, if all of our commitments in CFT in a month are 100,000, how much cash do I have left at the end of the month to cover that 100,000? If at the end of the month my cash flow position is 80,000, then actually I can't cover all those obligations. If my cash flow position is 200,000, then I can cover those obligations at least twice. Are we together? So the bank will say to me, well, I've looked at all of your accounts. I'm going to impose a condition that at the end of every month, you must have enough cash to cover all of these obligations you told me when you were creating that rosy set of financial statements you gave us so you could get the loan. I'm going to impose an obligation that you must be able to cover your obligations at least 2 times as a minimum. So that puts a different pressure on you to make sure that your obligations are not too high so that you can meet that covenant. The day you don't meet your bank covenant or your loan covenant, they'll be knocking at your door. The other thing that the bank will look at is to give you a covenant in respect of your income and expenditure, because they know all the tricks that we can play, isn't it? We don't play them, but that's how the accountants work. So they look at your income and expenditure and they will say, well, all these things that you have to pay for, I want to make sure that you're generating enough income, that you have a surplus. Remember, your income less your expenditure is that surplus. So I want to make sure that every month you have a minimum surplus of X%. So today when you came for the loan, you said this is your surplus, month on month for the next 2 or 3 years. Now that you're coming for this loan, and you are going to pay interest and these other things, in fact, I want you to maintain that surplus level as a minimum. What does it mean? It means you need to work harder. Either maximize your income or reduce your expenditure. And then they could give you a covenant around your balance sheet because they're interested in the ratio of your assets to your liabilities. So I won't go into the detail of that. I think there were 1 or 2 other things that I made a note of, and I'm just very quickly going to make sure that... Actually, I think I touched on them. Covenant tests, I wanted to be sure on. Annual trends was the other thing. So when we have our administrators' meetings, and we have them as a minimum 4 times a year, some of the things we're looking at are trends. And when I say trends, everybody knows what trends are. What's the pattern over a period of time? Sometimes we'll go as far back as 5 years. Because we have our income and expenditure accounts, we have our balance sheets, and we know what our cash flow is. But the key thing is around your income and expenditure. How much income were we generating 5 years ago? What has happened over those 5 years? Then we think about what were the events that actually influenced those patterns. Where were we spending money? I think Pastor Sidney was talking about electricity bills here. That's not why the auditorium is cold, by the way, just so you all know. But in terms of electricity bills, when we started, the bills were significantly high. There was a significant negotiation we had with, was it 13,000 pastors? Sidney has all the facts in his head. So, did you hear that? From 13,000 when we started in this building, monthly, we reduced our electricity bill to £4,000 a month. A lot of measures. One, we renegotiated. Did we move suppliers? He holds the purse strings, that's why.
Yes, we moved suppliers that got it into 4K a month. That is winter period. But during summer, it's less than 2,000. So if we left it as it's church money, let's continue. You can imagine what has been going on.
Thank you very much, Pastor. So the reason I went into that was that we look at trends. What's been happening? What can we improve? What can we do differently? This money we've spent here, what result has it given us? All the evangelism we've done in this particular area, what impact has it had? Because we must always come back to our core purpose. Why are we here? What do we want to achieve? When we spend, what was the intended outcome? Did we achieve it or did we not achieve it? If we're not, and I'm sure all of us have been around Apostle, if he sets out that we're doing something, if he's not achieving the purpose, he can shut it down immediately without thinking twice. He knows the reason why he's shutting it down. But if he doesn't achieve the purpose, then we're wasting God's money. So in terms of trends, we look at what's happening in every area of our spend. Why are we spending? Should we continue to spend? Maybe we've spent a little bit too much here. We need to renegotiate. Every year we look at all the contracts that we have. And just like you probably do, your broadband contract or your what's our TV? Sky, Virgin, and so on. All of us go and renegotiate those contracts. So as a church, we also must do that because that's the best way for us to minimize our expenditure. The final thing I will say is that when you have finished all of this and you've done all your budgeting and your auditors have come to audit your accounts, did I say final thing 3 times? Apostle is my father, so it's not strange. Pastor, check my time. I have 5 more minutes. Pastor Tayo is the one who increases the time when they're not responding. Okay. So finally, I better tell you there are 2 things in this finally then. One of the things I wanted to pick up on, Pastor Sidney talked about qualifying your accounts. One of the reasons why your auditors may qualify your accounts is if they're not convinced that you can continue as a going concern. Why will they be saying you can't continue as a going concern? You know, I talked about making continuous losses. So you can't sustain the business. So if the view is taken that we have looked at your accounts, we cannot even see that you have enough money to survive over the next 6 months. You know, banks are interested in your working capital level also. And as an organization, you must set something. I must make sure that I always have enough money to pay all of my costs for at least 6 months as a minimum. That I don't touch that. Whatever happens, I can still run for the next 6 months. Auditors want to see that as your policy, or whether it's the next 1 year, whatever policy you agree. But when they audit your accounts, if they cannot see evidence that you can survive for the next 6 months, then they're going to qualify your accounts because you cannot continue. You are not allowed to trade if you cannot continue as a going concern. So that's one reason why your accounts may be qualified, and you want to watch out for that. So the second point in my finally was, if the gentleman can put that, who was there? Where is Deacon Charles? Yeah, it was just a, do you have it? If you don't have it, don't worry, I will look for. Yeah, they had it on the screen when I started. Don't worry, I will tell. I've got it here. No problem. It's fine, sir. Okay. Thank you. I'm conscious of my time. So what I wanted to summarize in there was that when your accounts are completed, one of the things that you would have to do for your branches is to talk about what you achieved in the year. This is your overall operating review, or it could be called a financial review or otherwise. What were the things that you set out to achieve in the year, and what did you achieve? What was the impact that you had as a result of your purpose? So in CFT, you hear it many times. Apostle is saying, last year we had over 24, is it 24 or 27? I should know better. But, you know, graduates from our youths with first class. We had so many with second class upper and so on and so forth. In terms of families, we have done so much in terms of rebuilding homes and also setting women on the right path so that they're responsible in their roles as mothers and wives and also in the wider society. This is what we have done in terms of men. We have the young professionals in Christ, and this is the impact that they have had. We have gone to visit the poor in a certain area. We have assisted so many people into employment. We currently have a training that's going on for data scientists. We've got a class of, I think, 34 or 35, who in 17 weeks' time will be able to step out and take up opportunities as data scientists. So there is a whole range of things that you do as a church, apart from preaching and teaching the Word of God. You need to be able to demonstrate the impact that you're having in the wider society. And so when you're completing your accounts, you usually have an area where either the trustees, if you're looking at a commercial organization, it will be the director's report or the CEO and the chairman. You will be completing a report to say, these are the things that we did, and this is the impact that we had in the year. And if you're a good organization, you can start showing us, you know, we earned 100,000 last year. Of that 100,000, 70,000 pounds went towards this particular thing, which is our core purpose. Only 5% went towards our running costs, and the other went towards, you know, some other purpose. And at the end of the day, you know, sometimes we attract income when we don't expect to attract that income. Because there are organizations who are looking out for, where can I invest? Which organization can I trust? Because I've got this much that I want to give to a charity. And so you put yourself in a good position for people to actually call on you and say, we want to invest in the work that you're doing. And that increases your income, but that also increases the impact that we can have as a church. And ultimately, it helps us win more souls into the kingdom of God. But Jesus made sure that it wasn't just spiritual food. It was also about helping people achieve their full potential. May the Lord bless you. And thank you very much for listening.
Amen. Well,